Hey, welcome to another exciting edition of the Shoe and Show. I'm one of your hosts, Matt Priest. We are very grateful that you're here. One of the things, Sandi, that we like to do at FDRA is we keep our eye on really hot brands and brands that are blazing a trail and getting some buzz. And when our chief economist, Gary Rains, sent an email over to you and me, Sandi, maybe a week or two ago, and said, hey, there's this brand that's getting a ton of Google searches right now. That caught our attention. So we're going to talk about that brand today. And without further ado, who's on Shoeing with us today, Sandi?
Yeah, we are excited to have Scott Gabrielson, founder and CEO of Oliver Cabell, on with us today. He is coming in full force to the industry. I have seen this brand pop up on my social. I've seen it in person. I've seen the line during a recent Fanny market, and I'm excited to dig in and hear what's going on with this brand and what Scott has set out to do. So, Scott, welcome to Shoe and Show. We'd love to first start out by asking about your shoe journey. Like, how did you get into the industry and what started this whole business for you?
Yeah, no, thanks. First off, thanks for having me. It's a pleasure to be on the show and to chat with you all through this. So yeah, my journey's been a bit atypical with perhaps a lot of others in the footwear space following suit, having atypical journeys, but I'm from the Midwest, so not a great start to being a typical footwear entrepreneur. But I grew up in Fargo, North Dakota, went to undergrad in Minneapolis, and I actually studied finance and art when I was in undergraduate. And I was working at a hedge fund at the same time. So it was this interesting juxtaposition of a lot of business insights and intellect, but also spending a lot of time and energy on the creative side of things. After that, I went into investment banking and did some mergers and acquisitions work before I went to graduate school overseas. The impetus for me going to graduate school really stemmed off of my interest in wanting to get back into some sort of creative realm in a sense, but the hope of combining that with some of the business acumen and things I was able to garner for my time in finance. So that really stemmed, me taking a break from a traditional sort of working path, if you will, having a reset, going to the UK, and really taking a sort of a refresh on what I wanted to do. What I ended up doing during that time was designing some footwear, really as sort of a project within school and within class, and launched kind of more of a business plan more than anything out of that. As such, when I finished graduate school, I ended up just deciding to build a website from scratch, launch the brand and see where it took. I scraped together some dollars to buy some initial inventory, never took any outside capital, which we're still proud of today we haven't done. And we were fortunate enough when the site went live, we had a lot of great press, a lot of great traffic, and sold our initial batch of inventory. And it was really a sort of a, close eye on margin and cash flow and buying inventory and selling it in whichever fashion we could. And this was in 2018. And we sort of the initial journey stemmed from there. So that's the route as of today. And now, it's no longer me. It's a team of roughly 30 to 40 individuals, some freelance, some most full time. And we're spread throughout the world. So we're a bit atypical in the sense that we, through COVID, we sort of broke apart having a traditional headquarter presence. And now we have teams all throughout the world, all throughout the US. Primarily everyone is remote outside of finance, accounting, et cetera, which is also here in Minneapolis. And we're proud of, hiring the best talent we can, irregardless of location. And it's allowed us to grow in a nice way, but also have individuals who, are really specialized in their positions and not so focused just on hiring within a geographic area. So that's the quick synopsis of the journey from start.
That is, you used the word atypical, and I'm going to borrow that phrase, Scott, because it's almost an atypical approach to the industry, right? The business acumen coupled with the creative. But for those, and now that you've been in the industry for a while, it can be a difficult industry from a margin play, from holding inventory, clearly from the trade perspective as we deal with additional tariffs. Was there like another industry that you thought about, or was it footwear that you said to yourself, you know what, this is where I want to go? What drove the interest in being in the footwear industry specifically?
Yeah, great question. And knowing what I know now, maybe I wouldn't have, right? Because like you said, there is a lot of challenges, sizing, inventory, the physical, just, importing of the goods, tariffs now, competition. There's so many nuances to it, but that's, with any entrepreneur, I think if they knew what they know once their journey had begun and they had some experience, they probably wouldn't have done it, right? Because everything's so much harder than you expected. For me, it was a few facets. One is I've always been really interested in design. So what does that mean? There's architecture, there's interior design, there's physical product, etc. And that for me was the most interesting. I also always liked fashion in a sense, so that allowed me to open my eyes to that world as sort of a potential career path. But when I was in undergrad, I was doing a lot of ceramics, so essentially three-dimensional molding, which is what footwear is, right? It is a fashion product, but it's really a quite technical product and a three-dimensional product, unlike cut and sew clothing, etc. So for me, it's the challenge of it made it really hard creating a product that has so many components, so many hands, and so many facilities it needs to go through. But that's also the beauty of it. It is that challenge, and it also keeps, not anyone can launch a footwear brand in a day. You can do that a lot with clothing, etc., but it's much more challenging to do it. Just the technical acumen that's needed to create footwear. So that's what stemmed it. I also saw what was in the market, and I thought that there was a white space, which, that white space for us has become more clear with our journey, which we can get into. But at the beginning, from a pricing perspective and quality perspective, it seemed that there was an opportunity. So that was a lot of naivete, but here we are. And I've always loved shoes.
I love
So
that.
of it.
I love that, Scott. I think it's interesting. I am kind of curious about what you saw with the white space, because there are a lot of sneakers out there, and for you to kind of bust through the noise and make your own path in a world that's very busy and creative and fast moving, and a lot of big brands with a lot of big marketing strategies and money behind it. I'm so curious as to where you found the niche, and when you were launching, did you specifically, I know you specifically went direct to consumer at first. I saw that from your story, and I've learned that along the way, and that was a very strong presence. And I think until now, that's been your path. And now you're looking at doing some things outside of just direct to consumer. But tell us a little bit about your strategy. Was it first direct to consumer men's? Where did you find the white space? Why did you think that your product would be so different? I think it's creative and I think it's cool, but it also is very classic with an edge to it, in my opinion. I thought it was cool. I thought it felt very gender neutral. I thought I could wear that. My husband could wear that. My kid could wear the same sneaker and really find it cool. I'd love to hear your strategy, and I'd love to hear a little bit about your marketing plans, because they are pretty spectacular.
Yeah, no, thank you. Yeah, sort of three pieces to it I'll touch on. So one is on the channel side, right? For us, when launching, digital and direct to consumer had a lot of energy. There was companies that were going public in the space, and the ethos of it on paper makes sense, right? If you cut out traditional retail or wholesale and kind of classic retailers, you preserve all that margin, you get to keep all that margin, and you can use it to help tell your story. The other facet to it that was really interesting was the fact that you could tell that story directly to the consumer versus having to lean on a retailer to tell a story for you. For us, that made sense on paper, but we learned with time is those retailers have a presence for a reason. They get foot traffic for a reason, and they do a lot of marketing for you, right? So if you're not going to lean on them to do it, that means you have to do it. You have to get your voice out there. You have to get your brand out there. And that is not free, right? That takes a lot of dollars to do it. And that is what we had done at the beginning. So digital and direct is a little bit more of a simplistic, straightforward business model. You buy product, you sell it on your website. You don't have terms and working with retailers and EDI connections and all these technical facets that happens when you work with a Nordstrom, for example. And it was great for us to get a lot of the kinks out of the brand, because when you work with a Nordstrom, who's now a partner of ours, there's a lot at stake there, and they're putting in large orders that you're obviously, having to finance part of, and you just can't have any issues around quality or delays, et cetera. So, it allowed us to grow nicely, to get the brand into a good place, to do a lot of marketing and storytelling. But with that really came, which I think a lot of digital brands have learned over the last few years, is having a landlord, i.e. of Meta, Facebook and Instagram, that is not, they sort of have monopolized, in a sense, the digital marketing space. Of course, you have Google and you have these other social media players, but they're the big one. They're the one that commands most dollars for most brands similar to us. And with that, it's an auction-based marketing or advertising plan. So what that essentially means is who's ever willing to spend the most amount of money is the one who gets to show their ad. So with that, every year it gets more expensive, more competitive, and it's put a lot of brands out of business. So for us, we saw as we grew an opportunity to actually go to the more traditional, larger retailers. And that's a big, important direction for us now. We revamped our entire team. We revamped our entire approach, the way that we're doing promotion and marketing and seasonal releases, et cetera, is all with a big ethos and anchor in wholesale. So that's how we've been thinking about channel as of late. From the white space side, so when we launched the company, to your point, Sandi, it was really focused on quality, direct, clean product that is very versatile. A lot of other brands create product like that. A lot of the luxury players, for example, like a Common Projects is one that a lot of men wear or had worn, 10, 15 years ago, but at a $500 price point. We were producing in the same factories with the same materials at a, $200 retail price point. So that for us felt like what the white space might be. But what we learned was that was just a pricing component. That does not differentiate us as a brand. That does not get people to crave the brand or the product. And for us, about 2 years after our journey started, it was a big reset of what is the reason for us to really be here? Is it really just for a pricing play? Is there something more that we can bring to surface that other brands are not doing? And that for us stemmed a big sort of re-engineering of the product, a rethinking of how we're storytelling and how we're producing, et cetera. And that also stemmed off of a collaboration we did with TaylorMade Golf, which wanted a technical product that very much so looked like our current product. And we couldn't do any of that in Italy or Europe, right? There's not the technical know-how, materials, et cetera, to really create a comfort-focused, supportive, high-quality athletic shoe that also can function from an aesthetic side of things that looked very much like a lifestyle shoe. And that for us stemmed into us looking at our current product set and saying, okay, how can we invigorate comfort and support into something that looks very classic and versatile? So what we did was re-engineered our shoe from top to bottom, and every component within it was focused on comfort as a North Star, support as a North Star. So when I think about support, I'm saying heel support, arch support, for those that are dealing with plantar fasciitis, arch pain, whatever it may be. And our footwear is really engineered now as almost like a health product in a sense, but with a brand marketing and product design that's really focused on fashion design and in a really digestible aesthetic. So it's taking some like kind of geriatric, typically focused culture, if you will, with the foot health space, and putting a modern twist on it that's very palatable for someone who's just looking for comfort or for someone who really has a foot issue, which 70% of adults in the US do. So that was for us, a big eye-opening opportunity to say, how can, where does it make sense for us to exist? And what can we do that is fresh and different, but also from a product side of things really does help the consumer. And once we, really made that shift and adjustment, our growth continued to really take off. Because for us, it was now, people can wear something from, dinner to the gym to on the weekends to get coffee, and it can all be that same footwear. Not saying we, would suggest our shoes for exercise, but like there's the versatility and the ability to wear it when you're traveling and walking 25,000 steps within Europe in a day, or just going to, a more formal dinner or to the office, has really been a big emphasis for us and energy for us. And we have a big technical piece to the brand now because of it.
Scott, as you were talking, I kept thinking to myself, you really have a pragmatic approach to how you operate the business on the back end. Not speaking of the fashion and the white space kind of comments that you made, but more around moving towards wholesale, moving towards traditional retail partners, because I will tell you that we've had a number of digital brands, and they'll all remain nameless in this conversation, but they come to the table saying, we've got this secret sauce. We don't need the traditional industry, or they have a dogma that they're really they're kind of connected to, and they don't want to engage with the traditional industry. And then they find years later they're having to try to do that. Or conversely, we have major brands that say, you know what, we're going to move all to direct to consumer. We've been traditionally wholesale, been traditionally brick and mortar and retail and partnering with retailers. We're going to do D2C, and that's a disaster, right? And so you need kind of both. And it seems like you had the pragmatism in your approach early on, that you didn't have a dogma. Like, we're going to definitely always be direct to consumer because we got to protect that margin. And we've got this thing no one else has. And we're amazing and we're great. And all those things may be true, but we're a familial industry. Sandi and I talk about this all the time. It's a small industry, and it's hard to kind of break in. There's a lot of people trying to break in, but if you don't have the retail partners to do that, then the validity of your brand starts to take a hit if you're just, I think, D2C. And so it seems like your background made you uniquely positioned to not be too wedded to one approach to the next, but just to get the job done, drive success, and pivot and be agile in your approach. Am I capturing that in the way it kind of unfolded?
Yeah, I think you're giving me too much credit for having too much humility. I think what it really started with at the beginning was, I don't want to go back to finance. We need to sell shoes in any facet that we can. And, we had a 30% international presence out of the gate. We were selling to retailers that, of course, we vetted and we wanted to stand behind the brand, but they would be from Hong Kong to Norway to, in the south of the US. So it was really more of we need to move product because our dollars are locked into product. And that allowed us to have, I think, a more open mind in terms of how we can grow. We also did not raise outside capital. So with that, you can spend a lot of dollars advertising. You don't need to think as much about profitability and how you're going to grow. And when you have bootstrapped a company, have not taken outside dollars, and you watch your profit very closely, and you see over time how expensive it gets to advertise digitally, it's kind of a no-brainer that you need all channels to work together. If that's physical retail, like we have a store in New York, which is great for marketing, et cetera, for us. Digital, which we still think will always probably be the biggest part of the brand because we can do so much more storytelling and be a bit more agile there. But with that said, the wholesale retailer piece is so important as well because, just for a few high-level call-outs, like almost every very large footwear brand has a very large wholesale retail business, right? The ones that were the exception to the rule, i.e. in Allbirds, everyone knows that story. So not to call them out, but to call them out, right? Like it is really important to be thoughtful in terms of how you think you can grow long-term and get scale, et cetera. And while, there can be concentration dollar-wise with the retailer, they can provide a lot of value in terms of growth and profitability as well, because there's a handful of large retailers outside of all the independents that can do very meaningful business and can sell a lot of product for you. And for us, we went from 4 to 20 to 40 doors with Nordstrom within, nearly 6 months. And with that came, a lot of great things, a lot of challenges, but it opened our eyes to how having a great partner like Nordstrom can do for the brand and the validity behind it. And it supports, when people are buying from us, they also know in a sense that they are buying from Nordstrom, even if they are buying from us, because it's a stamp of approval that they don't give overly generously. So, they're very thoughtful about their partners. So to digress, yes, it's we are really excited about where it can go. We're really excited about where it's gone in the last 6 months. And we think, every brand outside of ourselves needs to take a really strong look at retail and making sure that it's part of the puzzle and that their margins can support that. So luckily for us, we had built our margins from the beginning to be able to, which was more luck than anything. And now we're really excited about where the journey can go, and where it can go as we think more about, outside of sneakers, where we can focus. And the nice thing again about a retailer is that once, you have a relationship with them, it's much easier to continue that relationship and expand on it. So yeah, to digress, it's a big important part of our business, and I think it'll become even much more so over the next couple of years.
That's great. Nordstrom is definitely the perfect partner when it comes to planning a growth strategy and collaborating on some of the opportunities around how to reach your consumer and figure out the kinks, if you will. They definitely lean in. They're more of a partner than any other retailer out there right now, I think, that really understands the challenges that brands are facing today with, what's happening with tariffs and, the economics and all that. So that's a great place to be growing your brand and your business. I'm interested to hear a little bit more about the next step for your brand in terms of both retail distribution. Are you looking for bigger retailers or the independents, or growing your own stores? And also about the consumer. Is there white space where you feel like you haven't really tapped into a certain group of consumers that you're looking to?
Yeah, good question. So yes, to all of the above. From a retailer perspective, yes, there are other great large retailers, but we want to be very thoughtful about where we're going to be. There is there's always an opportunity to chase stores and chase dollars, and that's a very slippery slope, right? If we don't align ourselves with the right partners, and as limited as they might be, then that could be a huge hindrance on the brand. So for us, time and patience is extremely important, but that doesn't mean that, it's not a huge focus for us. It's a massive focus for us. We're just wanting to be extremely thoughtful, and we have a head of sales who's very thoughtful about that as well. So we have nice internal alignment on how we want to do so, but we're trying to be very strategic about it and very thoughtful. We don't want to be overly exposed. We don't want to deal with markdowns, etc. And, we're having a lot of demand for the product, humbly speaking. So we're trying to be very, very careful about how we think about our expansion from a wholesale side of things. From a product side of things as well, we want the ethos as the brand to really dictate where and why we should go there. So with comfort and design and support being really the North Star from us from a product point of view, we want to think about categories that need that. Is it athletic footwear? Not really, right? You have On, Nike, all these brands that have massive resources, great technical know-how, and create an amazing, beautiful product. Dress shoes, classically very traditional, right? Very cobbler-esque in a sense. A lot of beautiful design, not a lot of great comfort that combines with that beautiful design. An opportunity for us that we're looking at very thoughtfully and are going to be going into this year. On the women's side, the unfortunate part for women is they've had to struggle with feet pain and shoes that are not built for comfort for, tales old time. So for us, we see a lot of opportunity there. But as a primarily men's brand historically, we want to be very thoughtful about how we expand into it. Having product very specifically designed for women, aesthetically makes sense for women. From our side, having a female designer who's designing with all of that in mind. And from a marketing standpoint, making sure that we can speak to the female in a very thoughtful way that doesn't feel like we're just a men's brand who's half-assed putting effort into trying to grow the women's side. We want to be extremely focused and thoughtful on how we're doing it and put a lot of energy into it. So we are doing that as well for 2026. And tabling it there, because those are two massive initiatives for us on the product side that are going to take a lot of resources creatively, marketing wise, product wise, etc. But we want to use that North Star of comfort, support, and design to really dictate where and why we should go somewhere. So that's how we're thinking through expansion.
And it sounds like, Scott, you got to be really disciplined on not taking outside funding because, my family and I watch Shark Tank pretty religiously. It's for both entertainment purposes, but educational purposes with my kids. And one of the things that happens all the time is that I got this big order and I couldn't finance it to fill the order. And so that's why they're there, right? They're looking for that outside financing. And so shoes can be expensive, the tooling and lasting and all the tariffs, all the things that go into it. You talked about Nordstrom, providing some great opportunities with some large orders. But as you think about expansion and moving into other white space, how are you going to kind of stay disciplined? What's your kind of core mantra internally about, okay, we can't, I'm sure people are knocking, we can't go down that route because it will dilute the brand. It will create another, someone else we have to answer to, or it will dilute the value of the brand to us as a team. Talk us through kind of how you're thinking about that as you expand.
Yeah, no, it's a great question. I think it's one that in the early days was much harder to manage. At this point, now we are large enough and are doing tens of millions in revenue annually and are strongly profitable, where we don't need to go to outside financing for really any facet. There's also a lot of great debt instruments out there if brands really need it, lines of credit, et cetera, to really deter themselves from having to give up equity, which I think is the very slippery slope. Like you said on the Shark Tank, is it's easy to see a few $100,000 check and give up a big part of the company, but in 5 years' time, if you have some robustness, that is can be one of the biggest regrets, unless they bring a ton of value strategically. And for us, it's just at the beginning, we couldn't raise money because who wanted to give money to a founder from Fargo who's never started a fashion brand and a first-time entrepreneur in his 20s? And then as we grew, we realized we didn't really need it. So, I think it's being very disciplined on the financial side of things and making sure if you don't have that insight, getting someone involved who does. Just to make sure that no matter your scale, you can be profitable. And we've always ran the business that way. If it's a bad month or a slow Q1, like it typically is in retail, then we make sure to adjust the business and our marketing energy to support it, to make sure that every month is profitable for us. So it can be very challenging when you work with larger retailers who, those payment terms are always post delivery. So it's hard to finance those things, but there is a lot of, it's called factoring, which is a way to get, you can get dollars if you have a PO outstanding through financial partners, et cetera, through this factoring approach. So there's ways to do it without giving up equity. But to your point, it's easy to chase the headlines that you see in press. And, we were seeing our competitors or other brands like us in the early days who were raising a bunch of money and were getting covered in Forbes and TechCrunch and et cetera, all the big, publications, and we weren't. But I think that was a good thing at the end of the day. And the last part of it is just having the discipline to say no. I think that's, for me as the CEO, it's really, my goal is to shepherd a common vision across everyone within the brand, empower them all to do what they need to do, not micromanage them, but make sure that there is clarity within everyone, within all the departments. And just saying no, it's so easy to say yes. There's so many things that come into my inbox every day that, naturally you'd want to say yes to. But for us, those are big resource constraints. You chase too many projects and you lose clarity in terms of what your vision is and the reason for being as a company. So I think, being disciplined on the financial side, but also just saying no to 99% of things helps really keep focus and keep, ourselves and other brands having the right direction and again, focus on where they or we should go.
Yeah, well, Scott, we appreciate you saying yes to our interview request for this podcast and for coming on and sharing the insights in what is a hot and emerging brand. If folks want to go check out the product, what's the best website for them to hit up?
Yeah, olivercabell.com.
olivercabell.com. Scott, thank you for coming on. We really do appreciate it.
Yeah, of course. Thank you. Thanks for having me.
Yeah, there's been another exciting edition of the Shoe and Show podcast, folks. Thanks for watching or listening or both. You go to shoeandshow.com for all the episodes. You go to shoetube.org to watch it in all its glory. And make sure you check out our episode next week because we'll have another one dropping on Monday of next week. Until next time, Shoe and Show is out.
Shoe In has been brought to you by the FDRA. the Footwear Industries Association focused on retail, trade, politics, and fashion, helping create and enhance conversations on all things footwear. For information about FDRA, visit fdra.org.